Welcome to a very quick overview of the max purchase price calculator. Now, most homeowners, when they first get the process started, they're really just fishing for details. What can I afford? How much is the monthly payment? Does it fit within my budget? Or maybe they see a home down the street, it's $350,000. What is the estimated monthly payment and am I comfortable with it? So what this calculator will do is offer two things. First, it'll offer what is the max that a lender might be able to qualify me for. And secondly, it gives you some details as far as whether or not that monthly payment works for you and fits within your budget and expectations on that monthly obligation. So the first step would be to click on the link. And once you get to this page, make a copy and you'll be able to save this spreadsheet into your Google Sheets and edit it from there. At that point, you go to your info. This will be the only page that you put your general information to come up with some figures to see not just what that scenario would qualify for, but some different option as far as affordability between lowering the sales price or increasing it. But to start off, we'll do a conventional loan. Conventional does offer a minimum down payment of 3 to 5%. 3% is for certain below area median income as far as the total income to qualify for the loan. But the average is going to be about 5% down, so we'll use that. And you'll see the notes here as far as the minimum monthly payment for FHA, VA, USDA, and conventional. The interest rate, we are going to look at our national average rates for the day. You'll find this on my website. Today, we're looking at about 7.172, which we will float over here and enter here into the interest rate. 30-year term, the taxes and insurance for our market here in Southeast Texas or the greater Houston area, 2.5% of the sales price for property tax is a pretty good average as far as estimating. And then same thing with 0.8% of the insurance. For higher price points, let's say price points above 400,000, you could probably lower that a little bit, but it does depend on the property. This 0.8% should give you worst case scenario. The mortgage insurance rate for conventional, we'll choose conventional good credit. And instead of $350, let's call it $375 a year in HOA fees. So here we're going to put in our income for our primary borrower. We'll say they make $65,000 a year with an auto payment of, let's say, about $550. They've got about $120 a month in credit cards and let's say $36 a month in student loans. Our second borrower has an income of about, we'll put in $48,000. They also have an auto, we'll call that $625. They've got about $120 in credit cards and their student loans come out to about $100 a month. From there, you click on your affordability dashboard and our max sales price for this conventional financing is gonna be right around $317,000 with a $3,063 monthly payment. The down payment, 5%, is $15,815. The estimated closing cost, which is about 3% of the sales price, is $9,489. And you'll see how that monthly payment breaks down between principal and interest, property taxes, homeowners insurance, mortgage insurance, which is estimated along with the HOA. Scroll down a little bit here. Our scenario that it automatically populates is our reasonable scenario. So reasonable means this is reasonably qualified. Conventional offers a max debt to income of about 50%. Anything above that, we can go a little bit higher with another loan program like FHA or VA. But for conventional financing, this would be your maximum. And you'll see all of the loan programs that will qualify for these particular scenarios here to the left. But our safe, which is very conservative, is going to be about $110,000. Our semi-conservative is going to be about $188,000. Our moderate, $257,000. Our reasonable is going to be about $316,000, but you'll also see all the different monthly payments here to the right. Now, FHA does have loan limits. Same thing with conventional. FHA goes up to about a $514,000 sales price with a minimum down payment to meet that max FHA loan limit. And conventional will have loan limits as well, upwards of about mid 700,000s depending on your location, but those links are here depending on where you're located and you could look those up as well. Outside of just the monthly payments for the home, you do also want to factor in just the operating costs, things like maintenance and utilities. So we're going to look at our scenario here. We'll look at the reasonable scenario since that's the one that we have populated. And as you go down, let's say we have an estimated square foot of, let's call it 3,100 square feet. We'll choose a moderate cost per square foot at about 10 cents per square foot, and also a moderate maintenance savings per year, about 0.5% of the sales price. Now you can change these around if the house is a little bit older and needs a little bit more maintenance. You can move these around in order to get your worst case scenario at 14 cents a square foot, or worst case scenario about 1% of the purchase price. But those may be a little bit high. So just for estimating out, I would suggest probably leaving it at moderate. But as you can see, that $3,063 monthly payment, along with your other costs between utilities and maintenance, gives you probably a total housing expense, not just the payment, but the operating costs of it between maintenance and utilities, somewhere around $3,500. And granted, this is a ballpark, but this gives you an idea as far as what that home will cost total, not just your monthly payment. The down payment and closing costs are identified here at $15,815, and you'll see 5% down. Your closing cost of about 3%, $9,489, which gives you a total cash to close estimated at about $25,304. Our next section here, we have our baseline price with our reasonable scenario. But what if you go 5 or 10% lower, or 5 or 10% higher? It'll give you that estimated purchase price between your down payment and closing costs, and the estimated monthly payment, and how much lower it is than our baseline, which is our reasonable scenario. So it gives you quite a bit of information here as far as whether you go up a little bit or down a little bit. Now, this section here allows you to do the same thing, but kind of just move some things around manually. You can edit this field as well. So if our baseline is about $316,294, what if we do $298? That $298 gives an estimated monthly payment about $2,888, which is about $175 a month lower, and outlines those estimated monthly costs between principal and interest, taxes, insurance, mortgage insurance, and your HOA. Now, the way a lender is going to create or identify your maximum purchase price for what you can qualify for has to do with the debt to income ratios. And I won't spend too much time on this, but this will give you an idea as far as what we look at and how we come up with that max purchase price based on debt to income. So definitely look over this. The math is pretty cut and dry. If we can go up to 50% of your total debt and you make $10,000 a month total monthly income in the application, then everything between the housing payments, between principal and interest, taxes, insurance, mortgage insurance, HOA, along with whatever you also have in your credit reports, we have about $5,000 if you make $10,000 a month to calculate in with that max purchase price. So if our monthly payment is $3,500 and you have $1,500 in debt between car payments and credit cards and whatever else, that $5,000 total is where we come up with your max purchase price. And as far as what we build into the monthly payment on the home, a little trial and error, and that's where we get your price point. Scrolling down a little bit more are some affordability theories. We have the Dave Ramsey theory here, qualified mortgage, the 30, 30, and 3, and a 2.6 ratio. And towards the end of this, you'll see some frequently asked questions. What should I decide is my maximum purchase price? And it's not always what the lender can qualify you for. At the end of the day, it's really what you're comfortable with and your budget. And this calculator kind of gives you enough information to where you can look at the details and see, am I comfortable with a $3,500 monthly payment or $25? And gives you some options plus or minus to see if that fits within your budget, if it's something you're ready to move forward with. What if there are no homes in my area below my max purchase price? What does being house poor mean? Again, a lender can tell you the max for what they can qualify you for, but it's up to you to decide what your actual budget is. And what happens if you buy a home and eventually cannot make the monthly payment? Of course, that's not where we want you to end up. It's very important to me specifically, and should be to most lenders, that you not only understand the transaction that you're getting into, but are comfortable with the monthly payments and it fits within your budget. So you are more than educated and have all the decisions you need to make an educated decision moving forward. So from here, you've got at least enough to be somewhat educated as far as what you can afford. But at the end of the day, the only way to really know is to connect with a loan officer or lender, fill out an application, and really dial down exactly what we can pre-approve you for. And then at that point, you've got your pre-approval letter and are ready to go out and start shopping for homes. If you have any questions while filling this out, feel free to contact me directly and visit my website at myhomeloanguy.com, and happy house hunting.